While several banks, such as Signature, Silicon Valley, Credit Suisse, and First Republic Bank, collapse, there is another issue brewing in the United States. The debt on commercial real estate is rapidly growing on real estate no one longer wants. This sounds like an irrelevant problem to many, but the commercial real estate situation may affect both the housing market and worsen the banking crisis. By the end of this video, you should have a good understanding of the situation. So, how did we end up here? Let's start with a definition. Commercial real estate refers to any real estate that is used for business purposes. In other words, commercial real estate includes retail spaces, office buildings, warehouses, hotels, and even larger apartment buildings. Now, it's extremely important to mention that not all commercial real estate works the same way. We can divide them into several categories sorted after their riskiness. Apartment buildings and other real estate where a larger number of people live in is considered to be the safest kind of commercial real estate investing. That is because no matter what happens in the economy, people need a place to live. On the other hand, office buildings might be one of the riskiest properties to currently own. This comes as the demand for offices fluctuates, and especially after the COVID-19 pandemic, the office sector got hit particularly hard. While retail spaces, hotels, and warehouses still stay relatively solid, office buildings are currently threatened by the idea of working from home. Why is this a problem, you may ask? Even though only the larger investors profit off this type of real estate, it plays a crucial role in our economy. First of all, it provides space for businesses to operate and helps to drive job growth and economic development. From an investor's perspective, investing in these types of real estate generate income through rent and appreciation over time. Now, here's the current problem. The amount of office spaces available for lease in the U.S. just hit a record high of 16.4%. In some cities, the vacancy rate is even over 20%. The higher the vacancy is, the lower the rental income. The lower the rental income is, the lower the value of the real estate. Let's take a look at one example. Back in 2019, this 22-story office building in California Street in San Francisco was worth around $300 million. Today, as vacancy on office buildings in San Francisco has peaked at 29.4%, brokers fear that the same building that was worth $300 million 4 years ago will sell for an 80% discount relative to the 2019 valuation. That's a serious price drop. This is not the only problem. There are huge amounts of debt linked to these types of buildings. In fact, almost $1.5 trillion of U.S. commercial real estate debt comes due for repayment before the end of 2025. But who lends money to these types of buildings? Between 2017 and 2022, the smaller banks' exposure to commercial real estate lending have increased by about 50%. This have led to regional and local banks being the most common lenders to these types of loans. And as we have currently seen in the U.S. banking sector, these types of banks are not too large to fail. Smaller banks holds in fact 30% of the office loans and 46% of retail loans according to MSCI. This means that a bunch of smaller banks who already struggle for their survival might take huge losses from commercial property investors that aren't able to repay their loans. In practical terms, this comes as hundreds of billions of dollars of commercial real estate debt will need to be refinanced in the next couple of years. In addition, banks will be less willing to lend out loans for these purposes, which means that the property owners might be squeezed between lower rent payments and probably higher interest costs since the banks don't want to finance their projects anymore. These mechanisms might force investors to sell off their properties, of course at a lower price than they wish for. In other words, if you are a potential buyer, you should watch the situation closely to see if you can get your hands on a cheap office building, if you dare. But will this decline in the office building sector lead to empty buildings long term? Probably not. The remote and hybrid work trends, which are the primary drivers of this shift, may not make a U-turn, but so can the office buildings, at least, sort of. As we mentioned in the beginning, the types of real estate that people live in will probably stay relatively solid because of the need for a place to stay. These types of projects are considered safer by both investors and banks. Therefore, some property owners are looking at the opportunity to convert their empty office buildings to residential. In reality, this is not as straightforward for everybody to do, both legally and financially, but states like California are trying to make it easier for property owners to make this conversion. This might be one solution to the empty office problem, but unfortunately, the housing market isn't unaffected by this way of solving the problem, as thousands of old offices convert to thousands of new homes. If you have only a slightly understanding of economic mechanisms and how they work, you will understand that thousands of new homes will have a negative impact on the housing prices. In other words, if you own any residential in California, don't be surprised if it devaluates due to the office to home conversion. But does this mean that you should sell your home already? Well, probably not. Even though the commercial real estate situation is a bit scary to follow as bank employees and real estate investors, the situation isn't as horrifying as some people want it to be. Remember, the dramatic headlines and media doesn't reflect the intensity of the crisis. Humans are hardwired for fear, so if you see a dramatic headline about the commercial real estate crisis, then your attention is what is sought after, not your actions. So, are we in the beginning of a crisis worse than 2008? Probably not. Is the commercial real estate problem still a difficult situation? Yes, for sure. Here are some things to keep in mind before panic selling your home. As we mentioned in the start of this video, commercial real estate consists of several types of real estate. The fact that office buildings are experiencing trouble is first of all not a new phenomena, but neither does it imply that all investment in commercial real estate will be plunging anytime soon. In other words, commercial real estate does not equal to all large office buildings. Even though the vacancy is rapidly increasing, there will still be a demand for office spaces in the future. Not all empty space is a value of zero. Some office spaces can be converted to residential or other uses. Although small banks stand for a relatively large share of the loans linked to commercial real estate, money is still shuffling around the banking system. Several banks have collapsed and more will likely fall, but a couple of bad apples doesn't mean that everything is spoiled. Despite a new bank collapsing every other Friday, the majority of banks, even the smaller ones, are still healthy for now. This comes as banks hedge risk. In fact, the very purpose of banks is to manage several forms of risk. So rapidly rising interest rates and commercial real estate turbulence were for many banks obvious risks. In addition, both the Fed and the FDIC have programs to help banks deal with these types of risks. The main problem in most of the banks that have currently failed is in fact their business model. When it comes to the effect of the housing market, it's hard to imagine that the empty office situation will affect the housing prices anytime soon. A large, sudden conversion from office spaces to homes is less likely due to the fact that it's an extremely costly, time-consuming, and legally difficult process to make. By now, you should hopefully have a greater understanding of the commercial real estate situation, how it can affect the banking crisis, and the housing market. If you found this video informative, we would appreciate if you hit the like button. You can also share this video with your friends and family to prevent them from panicking due to dramatic headlines in the media. If you want to support this channel, you can find a link to Skillshare in the description down below. Skillshare is a platform where you can take thousands of courses by experts in different fields, such as photography, marketing, business analytics, and much more. By signing up, you will not only increase your physical or cognitive capital, but also supporting this channel to create similar videos in the future. Thanks for watching, and see you in the next video.